I think that the surprise of the lackluster recovery of China after the reopening from the pandemic has really been down to the fact that it hasn't been something which has automatically sprung into life. It needs that element of confidence in order for us to move forward. But that will come. We sincerely believe that that is on the way, and it will be helped by the stimulus measures that we might hear about today, but we certainly expect in the coming months.
And how have you been positioning around China right now, whether it's onshore or offshore assets?
Well, on the equity side, we remain constructive, but selectively so. And in that sense, it is one of the cheapest markets in the world. We think that over the next 1, 3, 5 years, that a lot of investors will make a lot of money out of Chinese equities. But the timing is difficult, partly because of the uncertainty around those stimulus announcements. And therefore, from that perspective, we're cautiously optimistic, but probably have to be quite reactive to the news. On the bond side, as we were talking about earlier, obviously yields are falling quite significantly in the domestic market in China. And there's also selective opportunities in the credit market as well. So there is plenty to get your teeth into when it comes to Chinese markets. And I think that it's something that global investors should take another look at.
Should seize, to your point. To your other point, it's always very difficult to time markets anyway. And in this case, of course, we've been bobbing around the bottom for some time now. We just showed a graphic there of just valuations and how cheap things are. In other words, our explicit understanding of what a market should look like before it rallies, this is the quintessential market for you right here. What confidence do you have, what gives you confidence we are at the end of the tunnel?
That's obviously quite a difficult question, and again it refers to your point about timing and the uncertainty of the timing of policy announcements and the catalyst that we need really to start to realise those very attractive valuations. I think that that's why perhaps I'd be controversial and say that we shouldn't try too hard to time markets. I know that we're all under time pressure when it comes to performance, but nevertheless we think that this is a good time to average in to these markets, which are showing good valuations, but on a selective basis and also on a nimble basis. We have to react to policy measures, and perhaps that's a lesson that we've had over the last 5 to 10 years when it comes to China, that we do need to be quite serious and take into account what the policy announcements are and the nuances behind that.